Good morning, everyone. Today we'll be talking on demand and supply, or supply and demand. That's what it's commonly called. So we'll be talking on supply and demand. Now, what is a supply? What is a demand? A supply invoice is actually there are zones with high liquidity. So actually there are high liquidity zones in the market. Now you should take note that a supply zone is not the same as a resistance. A demand zone is not the same as a support. All demand zones are support zones, but not all support zones are demand zones. All supply zones are resistance zones, but not all resistance zones are supply zones. Take note of this. Now, those are zones with high liquidity. And how will you spot liquidity in the market? You spot liquidity by checking the kind of candle that you will see at a particular point. If you look at this move from this point up to this point, you see the candles. From this point up to this point, you see the candles. From this point up to this point, you see a candle. Then from this point to this point, you see the candle. So you go on your chart, you will see so many of these candles, so many of them. Those are actually high liquidity zones on the chart. Now, when you get on the chart, how do you spot a demand zone, or how do you spot a supply zone? The first thing is market structure. Identify the kind of market. By identifying the kind of market, you look at this move here. This is a high reversal point, but this thing actually is due to fundamental. So in spotting a demand or a supply zone, I consider at least 3 high momentum candles. If you look at this point here, actually we had from this point we had 1, 2, 3 candles. So this will form a demand zone. This 1, 2 is actually increasing momentum. It's not really the best. Then this one to form a zone. Now a supply zone at this point, you have a good supply zone at this point, because after that we had a very long move and powerful move down, about 3 candles. So that is it. Now how do we draw a demand zone and how do we draw a supply zone? In drawing a demand zone, the first thing is we spot the structure, we spot the zone. When we spot the zone, then we grab our rectangle and we draw it. Now you draw and it covers the previous candle. Some people consider the red candle, while others they consider the other candle, but this is how I draw it. So this is a demand zone. Now a supply zone. If you look at this structure, this is actually a supply zone through here. This is a supply zone. So I think it's okay. This is a supply zone. Now, so that is how you draw your demand and you draw your supply zone. And if you look at this zone, what does this thing actually mean? These are zones with high liquidity, very, very high liquidity in the market. Meaning when the last candle gets to that point, something must happen. And if you trade demand and supply, you have powerful move within a very, very short period. So you can get in and within 2-3 hours, you see yourself making good profit. The same as you can get in and within 4 hours, you see yourself making good profit, be it you bought or you sold. But if you are trading using support and resistance, you may have a kind of consolidation. We may have a kind of chopping market within that structure for a particular duration. It may take even 2 days before you actually see an abrupt move. So people that trade demand, that trade using demand and supply, actually they get in and they make very good profit within the shortest possible time. That is the first advantage. The next advantage is most demand and supply zones, actually the risk to reward ratio is really, really high. We'll come to that. So if you draw these structures, you discover this is actually a demand zone and this is a supply zone. And now when you spot a demand zone, what are you expecting? You draw this structure. Let's assume the whole of this move was not there, so I actually spotted this move like this, and after that this actually went up. So it went up, we're expecting a move down and it came back down. Now when the last candle comes back to this point, what are we expecting? We're expecting a move up. So in essence, demand zone or supply zone is divided into two. We have what we call the used demand and we have a fresh demand. So at this point, this will form a fresh demand zone. This will form a fresh demand zone here, and when you move forward, it actually form a used demand zone. So when it comes back and retest this point or it touches this point, it forms a used demand zone and you buy up. So you trade this move here after the fresh demand zone has been formed. So you look at it, actually it came back down. When it came back down, retested, and you see the move up. Now when it retested this point, this demand zone has been used, and since this demand zone has been used, there's high probability of break. Contrary to what support and resistance will tell you, that if a structure is retested several times, it becomes a strong or a weak. It becomes a strong structure, be it a support or resistance. Demand and supply will tell you when that structure is retested, there's high probability of break. So when it comes back down, then it goes again, there's high probability of break, and if it breaks, may retest, and you see it very far down. So that is it. That is how you spot a strong and a weak demand zone. This is actually a demand zone, very strong demand zone. And the same thing for a supply. If you look at this thing, this is actually a supply zone. Let me just try to mark. This is a supply zone. So on this supply zone, when the last candle came back down here, look at this thing. When it came back down, it must retest and it goes down. So it came back down. You see it down before we had a break, and that is how it goes. So it came back after the break. You see it came back, we tested this point, and you see the move up, very powerful move up. When it came back down again, look at this move. So this is actually the main structure. So this is a fresh demand zone, this is a fresh supply zone. When it came back, it retested support and resistance. Support can become a resistance and vice versa, so it's still valid here. So when it came back, it retested this structure. You look at this thing, boom, is up again. So actually that is how you can draw demand and supply. Now demand and supply is also divided into 4 different moves. You have what we call the rally base rally move, so it's divided into 4. You have the rally base rally, you have the base rally base, you have the drop base drop, and you have the base drop base. So you have the rally base rally, the base rally base, the drop base drop, and the base drop base. What is a base? A base is a point on your chart where there are candles of almost the same sizes. So we have alternating buy and sell candles of almost the same sizes. Take note, alternating buy and sell candles of almost the same sizes. And when I'm trading using demand and supply, I check the number of candles on that base should be less than 5. Condition number 1, the number of candles should be less than 5. So if I draw a structure here, discover that the candles here are less than 5. If I draw a structure here, the candles are less than 5. So if you get in, you should understand these things. The candles here, they are less than 5, and the candles here, they are less than 5. So this thing actually formed a base. Now you can actually spot a structure here. This is a structure. So we have a rally base rally move on this point. Now what is a rally? A rally is an impulsive move, while a base is a pullback, but it's a special kind of pullback. I said alternating buy and sell candles with almost the same sizes. So if you look at this point here, this thing actually formed a base here, alternating buy and sell candles with almost the same sizes. So this was a powerful move up. This is a rally. After the rally, you have the base, and after the base, we have another rally up. So this is the rally base rally move. Now you can have a base rally base. So you can actually spot a base here, then you have a rally and you have a base. Now this one here, it does not match the conditions we said about demand and supply. So we actually have a base rally base here, because I'll consider this point here to be a base. Consider this point to be a base. Then we have a rally up, then we have another base here. This is actually another base. So this is a base rally base move, but I just explained a rally base rally move is actually this kind of move. A spontaneous move, a move up, then have a base. After the base, you have another rally up. So you can have rally base rally move. They have a base, you have a rally, and you have a base move. Then on a downward move, you can have a base drop base move, or you have a drop base drop move. So this is actually a base. You look at the candles here, then have a drop, then you can have a base move. Though this base down here was not really the best. The same as you can have a drop, then you have a base, and you have another drop move. So that is how you spot demand and supply. It is really powerful if you can actually trade it. So you can go, you develop your setup, develop your trading style on demand and supply. Now the last thing I will do is explain is demand and supply forms what we call a cup and an inverted cup. Now when you spot a demand zone, there is high probability of that zone reversing back to the initial point. The structure here. This is actually the base. After the base, we went up and this actually formed a supply zone here. When it formed the supply zone, what do you see? This thing came back down, we tested this point and went back up. So it formed a supply zone. After that, we went back to the demand zone. So this thing can actually form a cup shape or an inverted cup shape. Look at this move. So from this point, when it went up, this is the point, came back down. When it came back down, we tested this point. When we tested this point, it actually formed a cup. So this is actually a cup. So this cup has conditions. If this cup takes less than, or the number of candles here, because it takes the shortest possible time, the number of candles here are less than, or it goes for more than 30 days, then no, this thing may actually have a break. So you have a break and it goes up. But if it goes for less than 30 days, then the side probability of this thing dropping back. It came back to this point again. You see it up.